The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 23rd day of May. And we've got the Dow down 119 at 24,716. S&P is down 7 at 2717. Comp index is down 3. That's not bad. At 7,375. Interestingly enough, you've got the VIX index up 42 cents at 13.64, back in the teens, up 2.80%. We'll see what happens here. We needed a rest. Let me show you what's interesting. Look, the E-mini, leg D, probably a peak D today, because I don't see any chance of it getting to 27.42. That would start, and that would extend leg D. You've got the weekly chart with the H to the M pattern. 120-minute chart made a peak G at 27.41.75 and came down to a trough D and has had a pretty decent bounce since then. The Dow made a peak D yesterday with the sharp move to the downside intraday without no new high at 25,000, I think it was 88 or 86. 86. And now we're at 24,716. That's quite a few hundred points off. In fact, we made a little island reversal back down here. Now, what I am looking at here is that at a peak D with the MACD still pretty good, although turning down a little bit, and the stochastic still at 85%, darn good. There should be some support in the 24,600s, and that's the way I'm looking at it right now. Let's see what happens over the coming 2 days. Leg B in the weekly chart. It's also Chapman Wave 4. I'm watching this and saying, you know, we've had a pretty decent move, but it's been more choppy sideways. Instead of vertical, just adding on to the points on the upside, we've had quite a few pullbacks, and that's really saying you've got yourself. Let me just show you something here. I showed it in the Dow. Let me just see if I've got it. I did so much work. Yes, I think there it is. So have a look at this. This is the Dow chart, the daily chart, and we went from 23,344 on the 2nd of April to 24,858. In the Chapman Wave methodology, there's a technique that I developed which is called the parallel one-to-one extension. And that basically says that, yes, in Fibonacci and in other techniques, you can get your expansions, but this is different. This one says in the same angle that you went up or went down, there could now be a move that does the same thing, a parallel to the parallel. In other words, we went to 23,344 up to 24,858, back down to the 23,531 area, a higher high to about 200 points higher. And then we had an extension which went just a tad above the exact one-to-one and went to 25,086. That turned out to be a peak D, a Chapman Wave 5 conclusion, and now we're getting the pullback that we were anticipating. So look at the technique here that we use, and I'm just going to use this particular chart, and I'm going to put this on the side here. This is still from yesterday. The MACD, this is the MACD. Look how wide, and this is really very strong action in the MACD, the moving average convergence divergence. And look at that. It's just starting to narrow right now with the histogram, the vertical bars, declining just a tad over the last 2 sessions. But wait a minute. On balance, volume went back down. Had a fabulous day yesterday. Now it's back down quite sharply. And the stochastic, which went positive for a moment, has gone slightly negative. But overall, this is still pretty darn good action. I'm kind of impressed. Now, let's go to the, there we go. So this is the daily chart. There's the MACD. This is stochastic on balance volume is turned down. Relative strength is not that great. It's actually at about 55%, 57% maybe. It's okay. So the parameters to watch, 24,610 to 25,080, 23,580. That's what I meant to say. And the resistance now is at 24,790 to 27,860. Let's see what that can do. S&P. There we go. S&P is down 7.5 at 2716, making a peak D today if there's no new recovery high. That was at 2742.24. 2742.24. Let's change that to 24. Okay. And now what's happening is that we've had this peak D forming as we speak, because I don't know if there's any chance of getting to 2742.25. But in the meantime, the MACD is still good, and the stochastic's at 87%. That's good. On balance, volume's negative, and the relative strength is pulling back a little bit. So this is that H pattern to M pattern in the weekly chart. Still comfortable with that analysis. Parameters to watch: 2707 to 2703. Key support: 2722 to 2728. It's probably the strong resistance to tackle in the next day or two. Okay, let's go to the QQQ. Qs have made a peak D already at 170.82 over a week and a half ago. MACD's just about to cross negative, but it hasn't crossed negative yet. Stochastic is at 76%, down below 80%. Got to watch this closely. Nice rebound today. It's only down 6 cents at 168.11. So we'll watch this closely. And what we need to see is by Friday's close, up at the 168.80 to 169.10 area would be very impressive. All right, let's go to the IWM. IWM right now is up 21 cents. I'm calling this a peak F for now. If it breaks 162.32, 163.33, sorry, that'll be very impressive action. And if that happens, I could even consider that there's an alternate count. But in the meantime, that weekly chart is broken out, and that's really positive. This is still one of the stronger indices. IWM, which has been the strongest indice. Oh, that was the IWM. What's the matter with me? Let me just go back to the QQQ. So this is the IWM, 163.34 would start another move to the upside. Meantime, it's back at the range, made a peak F in the 120 minutes chart. And we've got a peak D in the 120 QQQs, a peak F at 175.21 on the week of the 17th of March, plummets to 153, rebounds very strongly. And this is something we're going to have to watch, because at 168.09, down about 9 cents, it's holding pretty well. So if the QQQ NDX 100 power shares trades under 165.50 in the next 2 days, that's going to be negative action. And if it goes over 168.56, I'd say that's quite good. Now I want to go to gold. Gold is down 0.70 at 12.91, hit the 9-period moving average and then pull back. This is going to be very interesting. Let's just look at silver as we're about to go to a break. Silver is down. Oh, then let's look at the dollar. DXY. Oh, dollar's up at a new recovery high, leg E. Fabulous. I'll be back to talk about it. We are still long the dollar. Dow's down 122.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Checking on this dollar. Look, the dollar, I've got this, I'm calling it a lay E for now, okay? So it went higher. I thought there was a chance that it could do some consolidating, but I love the fact that the weekly chart is still so strong. So we remain long the dollar. I did say to swing traders a day or so ago, yeah, you can take some profits there, but we're going to stay long. I like the weekly chart. Let's see how long this can go for. And in the meantime, back at the ranch, what's really important is that within the context of the markets, look how high the weekly chart has gone. It's gone above the 200-period moving average of 92.85, above the downtrend, long-term downtrend line. It's got the left side, right side price time match. A lot of things are going on, and 94.22 is still the objective to the upside. And look at the 120-minute chart. It's gone to a peak E in a left side, right side price time match. Cup formation. Technicals are still very good. Question about the INDU. Question, where did I type that in? I think I typed it on a chart. It would not be unusual. Let's try that again. All right, so that's the, okay, so the question was, on a Chapman waiver, wants to know, could an alternative count on 120-minute Dow be a restart after wave D, which would give the high of 25,086.49, a wave D? Just a thought. Yes. Let me just move this away. So it goes low bar of consequence at 23,531 on the air, 11:30 on the 1st of May, and then it goes peak A, B, C, D. Now that could have been an instant restart with an A, B, C, and we've just made the D over there. There are a couple of ways of looking at it, and since it made a G, there's no H. So basically, we really have no choice but to consider that this is now an alternative wave count. Look at that. And that becomes a G/C. Look, a G/C, G/C. This fulfills the D. It goes A, gray B, and then it makes a new high, gaps up to a new high, and that becomes D. And now we're pulling back. So that's the 120-minute chart. And this is the rule of thumb in the Chapman Wave methodology. We use the cup formation. If you come back and you decline about a third to a half of the entire cup from the left side lift to the base, that says that there's a real good chance that you're going to test the low. And if you test the low, there's a good chance you could even go 1-to-1 to the downside. So this is a really important moment as we're looking at it right now. Hope that answers the question. So a couple of things that I was asked about. Let's see if I can do this now. See if I can even remember it. Where did I put the book? Oh, man. Whoa. What did I do with my notebook? Had it already. Did I move it again? Oh, I think I moved it. Oh, what is that? Yep, there it is. There it is, or there it isn't. Nope, there it isn't. It's a notebook, but not the notebook. All right, doesn't matter. So we're looking at the Dow, and now we're going to move on. We're going to look at the EUR USD, Euro currency. This decline right now, as it was about to attempt a bounce, is not good action at all. Look, the MACD was making this soft W formation yesterday. It looked as if there could be a little bit of a bounce. Stochastic was not great, but it was trying to move higher. I said that it held above the 200-period moving average in the weekly of 1.175. Now look where we are, 1.170. That means the USD JPY, that is the yen, the dollar-yen currency pair, which just made a peak D top and pulled back very sharply, tested the 200-period moving average in the daily, Chapman wave stalk leg formation, the neck. When the beak is formed, the beak usually touches the top of the oval, and if it takes it out, watch out, because internally there are a lot of support levels that must hold. If the yen, US dollar, Japanese yen, actually takes out the low that was made right here on the 4th of May of 108.641, that's very negative action. But when it's complete, there's usually a very sharp rally when the Chapman wave stalk leg formation completes. So I'm watching this. I still don't have the signs. I have to wait for the end of the day to put a down arrow in here with a very quick peak A, peak B, peak C, peak D. So got to watch that. And also, it's very unusual to have this kind of a divergence with the dollar up and the yen pulling back. It's a little unusual. Okay, I had a question when I look at the GDX. Yep, we are along the GDX. I hope it wasn't stopped out. No, by a penny. Let me just double check. Maybe I'm wrong. I don't like to give misinformation here. Nope, saved by the bell. And now the GDX is at 22.23. There's a flat stochastic. MACD's not bad, but it's still negative. This is the moment, based on the 120-minute chart, for a move to the upside. If it cannot do that, then gold is saying we're not even able to use an opportunity as an opportunity, and that's going to favor the dollar. So this is going to be very interesting. So I was asked about when I showed the the Bitcoin chart. I don't know what I did with it. It's there somewhere, but I can't find it. So what I've been saying is that the GBTC, which is the Bitcoin Investment Trust, had a very negative pattern. It started to look good when it went to that peak C, which is now peak C minus. But I said there's this channel that it's forming. And this is a channel that if it doesn't take out the low of the channel, that is the dashed line, and takes out the upper part, it can have a real nice spike and then come back into the channel. Well, lo and behold, we've broken, the day's young, but we've broken the downside. We're at 1185 on the GBTC Bitcoin Investment Trust. Not good action. There's the H that goes to a lowercase h in the weekly chart. That is, in fact, the Chapman wave lowercase h to lowercase m pattern. We're seeing it all over the show. I don't like what I'm seeing right now. I think that we've really done a beautiful job of rallying, the best it could have been, and all these. Let me show you something here. Here we go. We got INDU, the Dow, peak D, SPX. A bunch of questions coming in. I know that. Yes, we'll get to the questions. Am I missing a call? No, I'm not. I need to refresh. There it goes. Okay. So this is with no new high today, the S&P will make a peak D. The XLE, look at this, XLE made a peak F. At least it seems to be making a peak F. This is in the daily chart, and that is at 77.44 with a high yesterday in the 78s. What was it exactly? 79.42. This will be a high-level consolidation unless it starts to take out 74.50 in the next three to four trading sessions. Look at this. Even the, where did I want it to go? Oh, the QQQ, remember? A peak D right there. The IWM is in a leg F, and probably today it's making a peak F. I'm a little cautious here on the shorter term. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, we're back. I had a question about EMX. This is Eurasian Minerals Inc. trading at $1. I can't recommend this. You've obviously been following it. The question I wanted to know, yes, if you're following it and you're kind of deep into it and you followed it for a while, this is very good action. And at $1, I'd say at 0.96 to 0.94, have a little nibble there, treat it as an option. That's about the best. Most people shouldn't be touching this. Not only that, the volume is very light. You can get in. It's real tough to get out very light volume stocks like this. Why label peak A? This is a peak A in the weekly. 0.80, the next bar is 0.79. So it's A, B, C, D. Yeah. So that's that clarifies that. So D in the weekly, monthly is improving. Yep, it's starting to look real nice, but treat it as an option, as a hopefully a non-expiring option. That's the best way to do it. There we go. All the questions. I think I've covered everything except TLT, which is trading up today, up 89. This is another reason why I'm thinking if the market is taking this opportunity with all those Ds, let me just find this in my newsletter, my Traders Corner today, and I said some caution now prevails. I actually wrote this yesterday before the close yesterday. So when the market was opening down sharply, it looked like, oh, big deal, but it was actually yesterday identified as a turning point because here we go. Peak D already in the Dow, leg D finally made in the S&P, QQQ's already made a leg D. The IWM leg E with a possible peak E today. I think it was E. We've got bond yields at a point where from here they can start to pull back a little bit. And if they do pull back and bonds rally, then there's a real good chance that you'll see the market take a breather here, pull back. This is the whole digestive thing that we're looking at, and that'll be a signal. I'll go through that in a moment when we look at the TLT. So many of our stocks had done so well, the picks that we have had, and even the semiconductors, even now, the semiconductor is down just a little bit, down 63 at 106.18. It's holding pretty darn well. It should have been weak yesterday. NVIDIA was weak, but the other semiconductors, the really important ones, were doing very nicely. Okay, so here's the TLT. Let me just see if I can do this. Do I have it? No, I don't. I'll get it. I'll start opening it up right now. Open workspace. I want to show you because it's so important. Here we go, long-term trade. Okay, so we'll see it's coming up in a moment. What's really important about this particular phase right now is that all the work was being done on the daily and the monthly charts. The monthly charts have still been holding really well, and the daily charts most of them have had real nice rallies since the low in late April, early May. Now what's happening is, look, we've made the D already in the weekly chart. From here we can start a consolidation. We can even start a pullback in yield as TLT rallies. Why? Because it's fulfilled everything we wanted. The 5-year, the TYXD. Everything after that is either an E or an F or a G, and maybe it's late in the game, but I am saying that there's a good chance we have a high-level consolidation in yields. That'll give the there we go, and that'll give the TBT, which was the inverted. Here we go. Look, inverted TLT made a peak E top, pulling back sharply. The MACD hasn't crossed negative, but it probably will. Stochastic is now down to 65%, not 80%, which I like, or higher. And the on-balance volume is making a little double top here. So yeah, now I think that the TLT can have a pretty nice rally. I'm just calling it a counter-trend rally because my eye says that the yields have not yet made their highs for this phase. Okay, I think I covered everything. Oh, I didn't do crude oil. Crude oil, that was a question right there. Good question. Crude oil making a peak D. Yeah, there's another thing I mentioned this morning, that even crude was making a leg D and now a peak D in the daily, and a leg D in the weekly, and a monthly leg D. So that's saying to me, with 3 Ds going there, I got to watch crude oil really closely. Here we go. Next question was, okay, so Boeing. Now, Boeing, my conviction was that Boeing wouldn't make an all-time high. It was a way bigger rally than I anticipated. 340, 348, maybe even 351, but spiraling up into the 367 or 8, 365, round number high. Let me just type that in. I'm going to be watching this very closely because it's not what I anticipated. If it's not what you anticipate, you always have to have respect for something that is showing you as being wrong. And so far, it shows me I'm wrong, but not totally wrong because it hasn't made an all-time high. I'm just saying, I just don't see how Boeing's going to do it right now. Could be wrong. Let's go to the next thing. You had questions that was Boeing, RTN. So yeah, this is very interesting because Raytheon, I believe, has made a serious top. That top is at, why did I not type it in? That top was made on the 24th of April at 229.75, opens at a 229 round number. All the ingredients that I look for at the top are peak E, and then it plummets down and it goes from the 229, it's called 230 for the moment, and it goes down to 197, 196.94. So 97 to 229. Whoa, that's the 30. Yeah, that's a pretty big move. It's a what, 12%, 13% pullback, and a peak F in the weekly chart. I think Raytheon is in for a timeout. It's already begun it, but the monthly chart has only had one bar below the last high, all-time high, so we're not even finished for that month. So that's what I'm looking at. Our next question is Caterpillar, CAT. Caterpillar right now is down 40 cents. Peak D in the monthly. Peak D in the day, in the weekly at 173.24 with the Chapman Wave 2-bar reversal, 173.24. Next bar is a high of 173.10, 14 cents lower. Then what happens is we've made a peak D. This is very unusual. A peak D in the daily, and it pulls back sharply, and then it has a spike. It didn't make a lower low. 138.05, 138.15. No, it didn't. So it made a new high. That could be an E. I have to call it an E/C. So anyway, Caterpillar's at the higher end of, in the middle of its trading range. Make it real simple. If Caterpillar closes any day below 152, that's very negative action. If it closes over 150, it's at 155.80 right now. If it closes over 158.20, that's going to be good action. All right. That's Bob. Next one. Oh, XAL. Whoa. Let's see what the XAL has done. XAL, which is the ARCA Airline Index, trading at 105.18, down 103. Man, these H patterns, look at that. It's about to test the left side low of 106.17. It's at 104.70, sorry. And it's at 105.17. And wait a minute, I was asked about Deutsche Bank. I remember I had a call about 3 months ago, and someone said, is it time to start looking at Deutsche Bank? And I said, don't touch it. There is just a slew of lawsuits and negative action. I would not touch it. Now, if you want a quick trade, maybe you'll find one, but I wouldn't do it just yet. Hold on, we'll be right back.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar special, visit the front page of TFNN.com before this deal ends May 28th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. A couple of things going on. A lot of questions in the den. One was, would you wait for BIP, which is Brookfield Infrastructure Partners, trading at 38.58. Has a long wick from a very, very crazy session, crazy week back in the week of the 9th of Feb. The question is, why not wait for that to be filled? It's trading at 38.58 with a really nice candle right now. So I would do my nibbling right now. If this is, you'll be following it, so I would just be looking at it. And 38.58, and all you need to do is, look, the low that was made was 37.54. Where did it go? 37.98, 37. Oh. 37.98. Yeah, 37.98. So I would give it a 37.50 stop just for now. And if you can get it at 38.59 and it actually raises to 38.9, no, if it touches 39 in the next 3 days without pulling back, you've already got yourself a nice, a tight coil-like spring at the bottom as the MACD is turning up and the stochastic is turning up. So I like it. But I like it only in the fact that right now it's giving a dip. By the end of the day, the candle could look ugly. So I'm just saying, start a position, BIP at 38.59, and give it about a point stop on a small position. This is just a start, a feeder position. But it's nice to do that here because of the arch formation, and that little skinny wick has had weeks, like a month, to be filled. And it's not yet got down to the bottom, and it's acting very nicely. Monthly chart is the one that worries me a little bit, and that's why I'm saying Because the only way you can do it is to start it here, and if slowly it improves, if at any point in June it's actually trading at 40.35 or so, that's improved the monthly chart, which it won't if it's going to close under 37.50. So this is a real nice way to do it. A question about Jazz, G-A-S-S, yeah, G-A-Z-Z, love jazz, always listen to jazz. A, B, C, D, leg E in the weekly, leg B in the monthly, and we've got in the daily. Now, this is a tough one. Jazz Pharmaceutical trading at 166.56. Why? Because I'm seeing higher highs and higher lows. It's looking really good. I'm just a little cautious about buying it at 166.65, when if it takes out 162, it actually could pull back quite sharply. That's a lot of points. It's still a small percentage, but I'm thinking points here. The reason why, look, if I draw a trend line like this right here, look how it hits that line. And then if I draw a trend line right here, it took it out briefly, but it has taken it out. So I'm anticipating it's bouncing between a rising channel. Yeah, I'd have a tough time because I see limited maybe 2 points, 3 points upside. I see the chance for 5 points to the down, 6 points to the downside. I don't think it's going to do that. You know what? Let's remind me again tomorrow. Let's have a look at it tomorrow. I need a little time to think about it. That's it. Oh, I've got a caller. Dan in Atlanta. Dan, how are you?
Doing very well, Basil. Thank you.
Pleasure. You wanted to look at?
IWM. Doesn't seem like the markets are quite in sync as far as, Dow, S&P, NASDAQ, and the small caps. With the small caps back at above all-time highs, basically. And just wondering what your take was, where you think you might get a retracement back into, a 10% retracement or so, or do you think it's off to the races if the small caps close above, on a monthly, above any prior monthly closes?
So that's really a well articulated viewpoint and analysis. So this is what I'm looking at. The IWM, every once in a while, over a period of, say, 6 or 8 years, you get the Russell 2000 leading, but for quite some time, it's led and then it's stopped, and then the others play catch up. I always think of this game where kids run around, they're holding hands in a long line, and then the one at the end, the one in the, well, it wouldn't be the middle, but on the left side, say, just stops dead, and then everybody keeps going, and the momentum either lets them keep going sharp, quickly, or they fall, or other things happen. It's a tough moment. Well, we have that in the IWM. It's led the market up. It's just gotten to a point where it's probably going to meet quite a lot of resistance in the 163s. It's trading at 161.68, the Russell 2000. If you look at my monthly chart, there's a long-term uptrend. Wow, when I said long-term, look at that. This long-term uptrend has started back in 2009 at the low. It then formed an up channel, and this channel has been pretty sacred all the way. It did break that when we had a Chapman wave stalk gate formation, and the beak went from 129.10, that was back in June of 2015, and went down to 93.64. So that was a pretty, it was I think it was about a 30%, 28% decline. And then on February of 2016 at 93.64, it went back into the channel, and it's held that channel. Now, what's really important is the upper end has a lot of resistance, and that resistance for the month of May can go to 166, and June it's about a point high because it's a rising trend line. So this, do you have a position, or is this is this part of your thought process in what you're doing in the market, or do you actually have a position?
No, I don't have. I have a short position in the Qs, but not in the IWM. And it just doesn't seem like, I'm in full agreement with what you take on the CODA. It doesn't seem like we've gotten the full pullback that would kind of slingshot us up there. And that's part of one of my questions, as well as your take on the COTA as far as.
So, let me just go through this because your slingshot when I'm looking at a coiled spring, that's where you get your slingshot. At this particular point, I think it's at the upper end of the range of the elastic band, and it needs to just pull back a little bit. So we've got a break coming up. Let me think this through. I've got the plan in my mind. I need to articulate it, and I'll be right back. We'll be back.
Yes, sir.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
All right, everyone, we're back, and we're back with Danny in Atlanta. So, Dan, this is what I'm looking at. The IWM trading down 13 cents right now, down at 161.60. The 160.30 was the breakout. If there is a close going into Friday at 4 o'clock below 159, let's call it 159.50. That is a close. It can get there, but I'm talking about a close. The reason why I want to close is I want it decidedly under the 9 EMA. If it happens as soon as Friday, that's going to say to me, okay, now we're going to see whether or not we have a unison sell-off with the Dow, the S&P, the Qs, the IWM, led by the SMHs. If the semiconductor index, which is holding pretty darn well here, it's only down 59 cents, the SMH, if that SMH can actually rally a little bit, and I'm not sure it can, I mean, we are long, I'm hoping we can rally, but at this particular point, I want to put the whole picture together. So I'm going to say to you, all I'm going to say right now is that we've made, at least in the 120-minute chart, a sell signal. I haven't got even a sell signal in the daily. I need to see it close below 159.50. but I'm going to use the IWM as a lead off for the other indices, and probably I'm going to do some work tonight. Tomorrow I'll articulate it better because I'd like to see end of the day. I don't want to talk in the middle of the day as if this is the daily chart. It's a daily chart, has not closed. So all I'm saying is that's the level I'm watching. If there's a test of the 159s and yet it still closes above 160.70, the 9-period moving average, that says high-level consolidation unfolding in the IWM. It is still leading the pack. Keep your eye on that. As long as fund managers have some focal point sector to focus on, that's a positive, and especially when it's a stock index like the IWM 2000, a lot of stocks for them to choose from. So I'm just going to hold off. I'm going to back off tomorrow. I think going into Friday, I'm going to have a much better picture. I don't want to jump the gun. I'm just saying to you, let's keep, I haven't got the sell signal yet. This is the first day off this leg F. So if you don't mind, let's hold off. Thank you for calling, Danny. So, folks, stay tuned for C Rose. Tonight is Steve's webinar. It should be a wonderful webinar, as he always does. Great webinar. Stay tuned for Steve coming up. Then you've got Dave White. I believe Dave White. Then Tom O'Brien. Have a great day. I'll be back tomorrow. Check out my opening call. Check out the Tiger dollars that you can save money on. I'll be right back tomorrow.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
This is TFNN, the Tiger Financial News Network. TFNN Headline News Update.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN headquarters in Clearwater, Florida. 1 p.m. Eastern Time, 3 hours left to go in the trading day. Let's check in on the markets as it's been a relatively mixed day. We have the NASDAQ squeaking its way into positive territory. NASDAQ up 4 points, trading at 73.82. Dow currently negative by 106 points, trading at 24,728. And the S&P is negative by 8 points, trading at 27.17. Let's jump over to the Nadex platform and check out some of the futures markets with 3 hours left to go in the trading day. So Dow 30 bouncing off the lows we made about a half hour ago, lows being 24,656. We're about 60 points off those lows, right in the middle of the trading range for the day, trading 24,713. S&P 500, a little bit of a different chart, approaching the highs that we made just after 10 a.m. this morning, currently trading at 27.17. NASDAQ 100, quite a different chart indeed, making new highs for the session. NASDAQ, the only index currently in positive territory, and you can see the difference in that chart. We trade higher from about 9 a.m., and from there, a bit of a pullback from about 10 till about 10:45, but higher we go, 69.06 in the NASDAQ 100. Gold contract with some volatility, as we've seen some volatility in the dollar index as well, affecting gold. Gold trading at 1289.85. Crude, some volatility as well, with the EIA number coming out at 10:30 Eastern Time. Jump over to what that EIA number said. So you had crude with a rise of almost 6 million barrels compared to an estimate of a decline of 2 million barrels. That's the headline number, and that hit that oil market quickly as a lot more oil than they expected, almost 8 million barrels extra than the expectation. From there, the price plummets in the span of 5 minutes, and we've been bouncing around, getting a little bit of a bid, climbing almost back up to that $72 price point. Still relatively expensive. Crude trading 71.63. Looking at that July contract now in crude. And Bitcoin trading lower as well. Bitcoin currently trading 76.25. So what else we have? We have earnings this morning. You had Target coming out with their earnings. Adjusted earnings per share 132 versus 139. Revenue 16.56 versus 16.58. But in terms of how the market is reacting to Target, not the reaction you would hope, down 5.4%. And on the flip side of that, though, Lowe's. Check out that, up almost 10% on the day for Lowe's. Stay tuned. We got our man Steve Rhodes coming up right now. Of course, we got Fed Minutes coming at 2 o'clock. Sure, that should be an exciting hour. And Tom O'Brien wraps up the trading day live from 3 till 5. Thanks so much, folks. Have a great day.